We seem to be seeing investors taking on slightly more risk in line with last week's rally. But again, sustainability is the big question, where again yesterday the market fell back after a few days of strong gains. Give us your perspective on the markets at the moment and the kind of sentiment that's driving things over on that end.
Good morning, Alishia. Personally, I think the market, you can't rule out profit-taking activities by investors. We saw the market rally for 7 sessions consecutively, and the market declined by 27 basis points yesterday. But overall, our outlook for the market is positive with the CBN announcement last week, especially around the resolution of the CBN-controlled banks and also the commencement of operations of the Asset Management Corporation. Overall, we think the outlook for the market, especially in the last quarter of the year, is positive. But occasionally we expect profit-taking activities from investors.
In that context, Nigeria is set to raise $500 million from international capital markets. So that's reduced from the $1 billion mark that Nigeria had been advised that it could potentially raise if it wanted to. Is this now a more realistic target in your view? And do you see Nigeria raising that full $500 million capital?
Well, if you look at the size of the Nigerian economy and also if you look at the current budget deficit, that's a far cry what is needed to finance, especially infrastructure finance. But however, the Minister of Finance made it clear that this 500 billion sovereign bond issuance is just to set a benchmark for the federal government in the international capital bond markets. So it's not much of the amount the federal government plans to raise, but it's just to set a benchmark. And also, again, it's also to set a precedent for local corporates who are seeking to raise international funding.
Do you see this getting companies to take advantage of longer-term finance? Because at the moment, I was speaking to a trader yesterday, and he highlighted that companies are more inclined to raise short-term capital.
Yeah, and that situation is as a result of how the economy is structured, because basically the major providers of funding in the Nigerian economy are the banks. And we all know that banks basically lend on a short-term basis. So given that the federal government is planning to raise a 10-year bond issuance, I think that will set a track for raising long-term capital, especially for the local corporates. So I think it's a positive thing.
Well, funds from the sale, nevertheless, if they are raised, will be used to develop infrastructure and reduce dependence on oil exports. That's the commentary we've heard out of the finance minister. Let's explore infrastructure development first, because we've got Dangote cement, it seems, then bulking up at just the right time. Some, though, saying that the valuations could be looking a bit overstretched at 135 naira a share. How are you viewing that company?
Well, there are many sides to this transaction, but I think we should focus on the positives of this transaction. This stock is going to account for about 25% of market capitalization. And we know currently the banking sector, including the financial service sector as a whole, accounts for about 40% of market capitalization. So this transaction would provide diversification for investors to invest in other sectors. And also it's going to deepen the liquidity profile of the Nigerian Stock Exchange further. So I think those are positives. If we look at the merger as a whole, the positives of the merger that is going to provide that greater access to capital for the enlarged Dangote group. So I think based on that alone, we can see that this transaction has a lot of positives. I don't really want to go into whether it's overvalued or undervalued, but let's just focus on the positives of the transaction.
Well, when it comes to diversifying the export industry, I came across a comment that if Nigeria has a competitive advantage in cement, then we should maximize it and turn the country into an exporter of the country. The viability of a move like that coming to the fore?
Currently, there's an estimated supply gap of about 40%. We expect the demand for cement consumption to grow. But however, we estimate that by 2012 or 2013, Nigeria would probably be in a position to start exporting, especially to neighboring West African countries. Currently, there are legislations in place that support cement production, because recently the federal government raised the tariff on cement importation. And also, there's also the requirement that if you want to import cement, you must demonstrate that you have the capacity to produce cement domestically. So I think these are positives for the sector. It's just that a lot of the cement players are plagued by high operating costs due to infrastructural challenges, but most of them are trying to find a way around this, and we think that going forward, maybe in the next 1 or 2 years, overall it's going to be positive for the sector. So probably by 2012, we'll probably start seeing exportation to at least neighboring West African countries.
Let's shift focus very quickly to the fast-moving consumer goods space. I was chatting to Ayo Salami, who's the CIO at Duet Africa Index over in London earlier on in the show, and he was saying that when it comes to investment in Africa, that's where their focus is, on the consumer sector. And with that, you've got PZ Cousins on your radar screen. What's the value proposition as you see it there?
Currently for the sector, we saw the sector rally strongly on the back of what we saw, the negatives in the financial services sector. The FMCG sector rallied in excess of 50%, and because most of the stocks, they are basically defensive stocks. However, I don't really see much upside potential in that sector going forward. But overall, the sector has a lot of positives. Most of the companies operating in that sector have a track of paying strong dividends. They have very good dividend yields. Also, if we look at the population dynamics of the Nigerian economy, we have a population in excess of 150 million. So these are positives for demand, especially retail demand. But I think in that sector, it's more of picking out the specific stocks you think might provide good investment opportunities. But generally, I think the sector, we don't really expect much upside in the sector, especially in the last quarter of the year. I think the focus will be more on the financial services sector, especially the banks.
Simply because of valuations on offer and the fact that we have seen that fast-moving consumer goods sector running pretty steadily off late.